Greetings from the Charter School Office. I am Albert Bertram, the Finance Specialist for the office. So this sheet is a part of what was the annual report last year, so we've broken out the finance piece into a separate piece this year. So this document essentially takes the large audit and summarizes it into 4 pages, and it also does a couple other calculations which I'll go over in this video. So this document is a communication from myself about the audit to others in the office and the field reps, and we're bringing it to the boards too. So it's a lot easier to compare this document from year to year than it is to compare 40-50 pages of an audit. So I'll go through it and explain where everything's from and then what everything is. So we'll start out here in the statement of net position. So this is the title of the page from the audit. So to show you that these are all from the audit, I will use total assets as an example. So total assets on the sheet are listed as $636,459. So if we go to the audit, here's our statement of net position. So there's the title. If we scroll down, we'll see our total assets right here of $636,459. Then you could match up the other numbers if you wanted to. So we'll go back to the sheet. For time, I won't go over all the numbers, but down here you have your ending net position. So the ending net position is the June 30th, 2014 net position. The previous net position is the June 30th, 2013 net position. So you'll see that Mildred C. Wells Academy actually had an improvement in net position from year to year. So that's good. So as we move down, this is the balance sheet section. So these are the current assets in the general fund, and these are the fund classifications in the general fund. So before I get into that, I'll go back to the audit, and the balance sheet is 2 pages after the statement of net position. So 1, 2. So here's balance sheet. Now you notice there's another fund. There usually is another fund, whether it's food service, debt service, whatever, in most schools. So it's important to note that we're sticking in the general fund column for this part. So here's our assets right here, and then if we scroll down, here's our fund balance classification. So non-spendable and unassigned. So we'll go back to our sheet. These assets should match up with the assets that I just showed you from the audit. And then prepaids, is important to note that prepaids are 39,890. If we come over here, we see non-spendable. So non-spendable is classified as amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. So this meets the definition of non-spendable. You can't spend if you've already spend something you've already spent. So there's none of these other classifications. So if you wanted to know what these are, they are in the audit. I won't go over them for time for right now, but unassigned fund balances are amounts that are available for any purpose. These amounts are reported only in the general fund. So again, if you don't know what those definitions are, they're in the audit. So before we move down, we'll move up. This box is the breakdown of the activity from the current year. So the beginning general fund balance, revenues, expenditures, other financing sources, net change, and then ending general fund balance. So this is the ending general fund balance at June 30th, 2014. Below that, you'll see a couple percentage calculations. So this one is the general fund divided by revenues. This takes the ending general fund and divides it by total revenues and puts it in a percentage form. So we like to see this trend upwards, so you can compare these calculations from year to year. So if it trends upward, or if it's above 10%, we consider that good. So that's kind of what that is. The state uses the general fund over expenditures, so it's important to know the difference between the two. So general fund over expenditures is the ending general fund divided by total expenditures. So this could be potentially skewed if there's a capital outlay in one year, so it's important to know why these two numbers are different. So that's why we look at both of them. And then this one is general fund minus restricted. If there was restricted funds down here, it would subtract that. There isn't, which is why these are the same. And then this one is the ending general fund divided by beginning general fund. So it takes the ending general fund balance, divides by the beginning general fund balance. If it's above 100%, there was a positive net change, which we see that it's above 100%, and we see that there was a positive net change. And if it's below 100%, there was a negative net change. So that's kind of what that indicates. So if we move down, these 4 boxes summarize the notes section of the audit, and then also page 4 of this sheet provides the notes section from the audit. So this is kind of important, and page 4 is the detail of what's going on here. So this long-term debt is usually associated with a revenue bond or some sort of bond financing for if the school owned its building. That's not the case for Mildred C. Wells. So over here we have notes payable, which is usually state aid notes or other short-term borrowing. In this case, it is a state aid note. There is a unique thing to Mildred C. Wells, which you can read in the notes, that the state actually calculated the state aid borrowing, that the Mildred received $100,000, but their payments were calculated utilizing a payment schedule for $200,000. So they were actually overpaying. So that's why if this negative balance means that this is actually receivable of $64,010 at June 30th, 2014, which you could read down in the notes section. So don't let this box be kind of misleading to you. This doesn't mean that there's a negative balance of money. This shows that there's actually a negative balance on the loan, that the school was actually owed money. So you can read that in page 4, and I'll show you where that's at. So the capital operating lease, this is the method that's utilized. So usually it's either a bond or a lease. This Mildred C. Wells utilizes the leasing financing. So that's what this is, the building lease for the year. Over here we have our management fees for the year. And then right here, this is a percentage of state aid. This isn't taking this isn't the contracted amount. This is taking the total earned and dividing it by the total state aid, just as a comparison from year to year, school to school. So that's what that is. So down here we have our total square footage. Now this is utilized for a couple calculations. So if this is off, let us know. We'll adjust it, and it'll automatically adjust all these numbers. But just so you know where the numbers are coming from, I'll explain everything here. So revenues per square foot takes the total revenues and divides it by this square footage. And then expenses per square foot, again, takes total expenditures, divides it by total square footage. And then the difference. So this can let you compare from year to year to see how things change. Payment per square foot is a little bit different. So since the school utilizes a leasing method of financing for their building, I took their lease and their payment and divided it by their square footage. So it's just their annual payment divided by the square footage, and that's where that $17 is from. The average for the Bay Mill schools is $14, just so you know. So over here we have operations and maintenance per square foot. So that takes the line item of operations and maintenance down here and divides that by the square footage. And that's $22 for Mildred C. Wells, and the average, I believe, for Bay Mill schools is $18. So just so you know. And then square footage divided by fall 2013 takes the total square footage and divides by the fall 2013 count, which is this corresponding count for this fiscal year. So we'll move down. General fund comparison. These are the actual numbers for June 30, 2014, actual for June 30, 2013, then the difference. So this will let you quickly compare from year to year. You can see the difference in state aid, what happened. Same thing with expenditures. These are revenues, so you can look at the expenditures and compare from year to year. What changed, why it changed. You can ask these questions a lot better, being able to look at this information side by side like that. So if you don't know what these numbers are, I've had a couple questions with these. If you don't know what these numbers are, these are accounting code numbers. These are how the different line items are classified in the accounting manual. So I'll show you a quick tool to figure things out pretty quickly. So we'll go to the accounting manual for a moment and look up basic programs. So if you put the accounting manual in Microsoft Word, you just go and copy and paste it into Microsoft Word. You come up, push find, and then come over here to the navigation bar, type in what you're looking for, make sure you're on results, and then you can actually scroll through this document and it will look for that particular word or words in the document. So it's important to note that you can't look up broad things like instruction is used too many times, so you have to kind of focus your search. But if you know what you're looking for, it's pretty easy to find things quickly. So here's the accounting code for basic programs, 110. And then basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. And I'll go on, I'm not going to continue reading, but if you wanted to look at these, you could scroll down and look at all these other things. So it's a good tool. If you don't know what something is, we can quickly find out what it is, and it's important to know what everything is. So that's that section, and then again, this column should match up with the box in the upper right hand corner of page 1. So this is kind of a bigger, more detailed breakdown of what was happening on page 1. So, and then this is June 30, 2013. So, moving down here, we have our budgetary comparison. This is the original budget. This is the final budget, the actual. This is from the audit, and then this budget difference takes the difference between the actual and the final. And then this percent change, just a percent change calculation based on the actual and the final. So this note over here, this is just stating that the original budget is due July 1, which is well before the count date. And there's usually a large discrepancy between these two numbers in many instances. So just a reminder to myself and others in the office that there's a time delay for the count information and when these budgets are legally required to be submitted. So down here, these calculations are instruction divided by revenue, so I'll show you what that is. So this just shows the trend, whether it's going up or down. Mildred C. Wells' trend has actually gone down. So we'll go up and look at why that is. So that calculation takes the total instruction and divides by total revenues and then puts it in a percentage. So you'll notice that revenues slightly increased and total instruction slightly decreased. So you kind of figure out why that is at the school level and what's going on. Now, it's not meant to be an absolute, though, because an example of what could skew these numbers is if revenues increased at a faster rate than did expenditures for instruction, that number would decrease. And that's not always meaning that less instructional services were provided. It's just meaning that less money was spent on instructional services. So a specific example would be if you had a teacher that was getting paid $50,000 and he or she resigned, retired, whatever, and left, and then a new teacher was hired for $30,000, that would actually lower that instruction expenditures line item while not necessarily providing less instructional services. So it's important to understand that these are not absolutes. These are just indicators to get your thought-provoking mind going and to ask a question. So these aren't meant to be absolutes. They're just meant to be thought-provoking numbers. So that's what that is. So revenues at June 30, 2014 divided by fall 2013. These are just another calculations. So per pupil amount, basically revenues and expenditures, and then the difference. So this would be something to watch from year to year and see how it changes, total revenues and total expenditures. Coming down to page 3, this is the enrollment numbers page. So these numbers are derived from CEPI, which I don't like to use acronyms without explaining what they are, so I'll go to the states page. CEPI stands for the Center for Educational Performance and Information. If you wanted to find these numbers, you go to My School Data, and then you'd come here and you could select student count, whatever you're looking for. And then there's these large spreadsheets. They go down to 91, 92 actually, so you could look up whatever you're looking for. There's other counts here, free and reduced lunch count, special education count, etc. So we'll go back to the sheet. I looked those numbers up for you. So these are from CEPI. This last one is a number I received via Epicenter, which is the program that transfers documents from the school to the charter school office. And this is an unaudited number on a sheet that's called the DS 4061 sheet. So that number is unaudited. So if the audited numbers change, that number is subject to change. So just so you know that if that number shows up differently next year, that's what's happening. This column is the percent change. So it just calculates the difference from count to count and puts it in a numeric percentage. If that's for our numbers people. For our visual people, we have a portrayal of the count data over here. So down here, so you can see the trending visually, which is good. And then below that we have our free and reduced lunch count. These are all from CEPI, same spot I just showed you. So these are the counts that are free and reduced lunch count, and then over here is this takes the count for free and reduced lunch and divides it by the total count, and then puts it in a percentage, and that's where these are derived from. And then down here is our visual display of the count data. So that's what that is. Now page 4. This is the note section. So this is from the audit. This isn't my words. These are page numbers are from the audit. So page 22. So here's a lease information, related party, just specifying that the land is owned by the former president of the board of directors. and rent $6,000 a month in relation to that. So, and then SAAN stands for State Aid Anticipation Note. That's the short-term borrowing, and that explains the that the repayments withheld from state aid were calculated based on $200,000, which was the full amount for which the academy was approved. Blah blah blah. So that's just stating that there's a comma there. I'll fix real quick. There's a And so this is that $64,010. So when that negative balance was there, that box is explaining what these words are saying. So, and if you want to look this up, it's on page 23 of the audit. So moving down, this is the management company information. So this is page 23 of the audit, and this is word for word from the audit. So you can look that up if you're curious about that. There's no findings, which is good. And then BMCC notes, this is just any other note that isn't specifically management company or debt related. So the only other note is that it was related to the contract that was extended through June 30th, 2017, and that's referenced on page 17 of the audit. So this document is reviewed by Mariah Wanick in our office, and then my email address is albertb@bmcc.edu. So if you have any questions, comments, or concerns, let us know. We hope you enjoyed the video, and we hope you got some value out of it. We were hoping that this would be preferred instead of regional board trainings that people would travel to that weren't specific to each individual school. So we hope you enjoyed it. Take care, and thanks for all you do for the children of Michigan. Have a good one. Bye.